All right, screw the timer. Let's just get started, right? What's up, everyone? How is everyone doing? How is everyone doing? Oi, oi, oi. Hola, ¿cómo estás? Bien, 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 Phil. How are you? How are you? I'm doing great. Thank you, thank you, thank you. What's up from Dubai? Love to see it. Love to see it. Wow, wow. Quite a lot of people here. Love to see it. First, Eclipse, of course, first. Love it. Amir, Khalid, Bilal, big man, big man. Love to see it. I also saw the, what is it? Where was it set? Let me see. Someone said it before me. Love to see it. Sunkop. Yeah, of course. Love to see it. Love to see it. Love to see it. December geeft mij even langs, man. Yeah, exactly what we're going to talk about. We're going to talk about December as well. I will check it, Alexander. I will check it. Thank you for letting me know as well. Thank you. From Switzerland. Oh, I was talking about Switzerland actually yesterday. Switzerland is such a beautiful country. Such a beautiful country. I love it. Hablas español un poquito. Basically, David, no, I don't speak Spanish. No. I speak a little bit. Just a little bit. Still trying to learn. Brazil watch you. Hey, love it. Ari, when would you stop trading for December? That's a great question, and that's exactly what we're going to go over today as well in the beginning. Of course, the forecast, etc. We talk about the market, but it's exactly what we're going to go over. From Yemen, Singapore, Argentina. Oh, yeah, Argentina, Portugal. Love to see it. Philippines. Speaks Polish. Oh, no. I don't speak Polish at all. I know a few curse words, but I don't think it's very good if I say those. Israel, India, of course, Of course. Hola, Pablo. Hola. Love to see it. I can't understand the market. It's so weird now. No clear direction and not going where it is supposed to go. Help us, our beloved mentor, guide us. I'm here to guide everyone. No, I will touch on it as well. So don't worry. We'll exactly touch on that because that's exactly why you might see the clickbaity. Watch this first. Stop trading. It's. I'm going to back it up with some knowledge as well. So don't worry at all. Uganda, South Africa, of course. Oh, South Africa. I would love to visit South Africa as well. Malaysia, Cameroon, Montreal. Montreal's Canada, right? Love it. Louisiana. Oh, I would love to go to America as well. Never been there. Never been to America, but the parks, etc. that they have is, wow. It's on another level. From Jamaica. Love it. Nepal, of course. All right, love to see it. Buongiorno from Poland. An Italian in Poland. Love to see it. Yeah. Italy, of course, beautiful country. A lot of beautiful countries in the world. Where are you from? I am personally from the Netherlands. I'm currently in Colombia, though. It's late for me. I lost my account. Did you lose your account? How did that happen? I took a loss today, my friend. Exactly all things what we're going to go over. I see very similar messages as well coming in saying, I lost my account, not really sure what to do in December, what is happening, etc. Not really a good trend. All things we are going to go over as well. Pluto, from Pluto, I love to see it. We have aliens watching the stream as well, of course. Love to see it. Alright, I'm 16 and I've been trading for a year, and I got your essentials basically 2 weeks ago and finished it. I've never touched funded accounts, and I'm not sure size funded I should get. The size funded account you should get is really based on your financial situation as well. So if you're 16, I would advise what I did at that time when I was around your age, and which is not too long ago, don't get me wrong. But what I used to do is I used to buy a 100k account and then a 200k account and then just blow that account. So I would not advise to do that. First, let's find some profitability in a 10k account, for example, in a 50k account. And once we see we can actually achieve profitability in those accounts, all right, let's now look to scale it. So that is how I would approach it. And again, that also depends on your financial situation. If you can buy one 10k account every single month, that could be great. Because then you have 1 month basically to pass an account. If you not pass the account or something happens, you have another month where you can buy the account, for example. That is what we want to do. How do we analyze why we lost a trade, Ario? If you can answer. Yes, that's a great question. And it's funny because I went over that today in the mentorship as well. And how you analyze a losing trade is, it's a thin line because you don't want to get too crazy with it, where you think, oh, I did something wrong, etc. And what I'm trying to tell you there is that sometimes a loss is just a probability. It like everything in the market is probabilities. So there's not a strategy that is 100% will always win, etc. We will never achieve that where we're always winning, etc. We just can't achieve that. So it's very important to realize that, because that allows you to also understand probabilities, which means if you just stick to your trading plan, etc., and it's a loss, then sometimes it's a loss. The only thing I would recommend, can you find something that could make the argument that it could be low probability, that trade? If we can find that, then we can add that to the experience. But don't change the strategy. That's very important. So, did you have any trades in December? No, zero trades for me in December thus far. And I'm not going to add any trades in December as well. So, yeah, same for me, Brian. Markets are not showing me anything. I saw a question that I wanted to answer before I wanted to get started. Let me see. Yes, this one. Can you recommend a book? Yes. I always recommend this book, and this book changed my life. If anyone is interested in it, then it's Reality Transurfing. It's a great book. Oh, need to spell it correctly. Reality Transurfing by Vadim Zealand. Great book. If you want to read a book, I would always advise that book. It's a huge mindset shift. Even in trading itself, it's a crazy psychology book as well. Really helps. I am 22 years old. Yes, 22. Does your mentorship help with getting funded? Well, that is our goal. Our mentorship is called the Money Making Team, and not because Money Making Team always sounds a bit iffy, right? If someone sees the Money Making Team for the first time, they're like, what is this scam? And then when I explain it, okay, our goal is actually to focus on making money. So yes, that is our goal. We help with getting funded as well. Yes. Who was your mentor? My mentor was mainly ICT himself, MentFX as well, a little bit. I've even been for a very short amount of time in Phantom trading, not the ICT Phantom, but the supply and demand Phantom. But mainly it's been throughout all the years has been ICT. And ICT learned the basics. I learned the basics from him and then took away from that and then found my own thing. It's arriving tomorrow. I read it this Christmas. Love it, Rubio. Love it. I like that a lot. How old are you when you start trading? I was, when I started was 17, 18, around that time. 17, 18. I've got the essentials, already know more from 4 videos. I can't wait to have a payout and join the mentorship. Love it. Absolutely love it. Love to hear it. Okay, type the book name. If you scroll a little bit back, then I think I type it. Or it's lagging behind a little bit, but I think I typed it. All right. What are we going to talk about today? Let's first, before we dive into the questions again, because I'm already getting distracted by the questions. No. I love the questions and I love answering them. But let's first dive into the understanding of December price action and what I would do in this situation, what I would always advise to do as well. This is generally speaking. Market conditions in December, we already know going into December, the volatility dies down a little bit. It's the same as August. Volatility is, before we fully dive into this, we need to understand the basics because everything leads back to the basics. The basics of why we need volatility in a market is because that allows there to be a trend. When there's a clear trend in the market, there's volatility in the market. When there's volatility in the market, there's a clear trend in the market. That clear trend allows us to have a very easy time. It's very easy going. When you have a clear trend, then all we need is that clear PD rate to trade off of and we can continue higher, right? So it becomes very easy to trade. When we have a lack of volatility, then that is when price is destined to have low probability conditions as well. Which, as a general rule of thumb, the months August and December are just not the best months to trade overall. Again, that is a general rule of thumb because, again, for some people, it might be great to trade. For some people, they love August. For some people, they love December. For me, even, in August, I had some opportunities that I could take. Perfect, so I can trade that. So it's a stereotype, and the stereotype needs to be confirmed by price action in that month itself. how do we go about that? Well, first off, we as well need to understand that December, there's periods in December where the volatility definitely dies down. And that is heading into the 2 last weeks of December. So I mentioned in the forecast, I'm not sure, I think it was in the mentorship, where I mentioned, all right, I did not get involved in the first 2 weeks of December. If I'm not getting involved in the first 2 weeks of December because price action is just not that, it's just not that nice for me, for my market conditions, for what I would want to see, then I'm definitely not getting involved in the last 2 weeks of December, because the last 2 weeks of December is where you now have Christmas, is where you now have New Year's, etc. So that is where the volatility definitely is going to die down a little bit more as well. So I don't want to do anything. And the forecast in the mentorship, if you are a part of the mentorship, you'll hear me say over and over every single day, it's like, well, we're in December, I don't like the price action, I'm not going to force anything. And especially this time right now, the way I compare this as well, if you had a profitable week and Tuesday, Wednesday, you made a lot of profits, you made great money, and then on Friday, London close, before the market closes, you are going to risk right now a few percentage to make, again, some more profits throughout that week. Why would you do that? Why not wait for January and then enjoy Christmas time if you, of course, celebrate it, and then enjoy your New Year's, if, of course, that's also the case for you. Then that is what I would do. Enjoy a little bit of time off the charts, get ready. That's the most important part, because we can either be stuck right now in this loop where we try to force ourselves in December, where we try to force trades in December, or we get ready. We get ready mentally. We get case studies ready. We do some extra studying on certain concepts, and we get ready for 2024. And who will we beat? Well, it's always funny because I always think the market is based on psychology, as in people are profitable because they can keep their psychology in check the longest. A person that can't keep their psychology in check the longest is our liquidity. So, for example, if you listening to this right now, if you keep your psychology in check the longest, meaning that you don't have emotional errors, you never overtrade, you never force an ID, etc. And I, Arjo right here, I always force an ID, I always have emotional errors, I always overtrade, always revenge trade. Then my entry that I take, because I am overtrading, is your liquidity. So the market moves based on psychology as well. Yes, liquidity, but the liquidity is generated through psychology. So it's not I'm targeting your stop loss because we both have the perfect technical analysis, etc. Well, everyone can learn the technical analysis. That's not the problem. Psychology right there is the differentiator. The differentiator is our psychology. So if I, for example, trade throughout the whole December, then I will go into January with a messed up mind. I will have a lack of confidence. I will remember the December price action where I got absolutely beat around the bush. And another guy, you, for example, you might think, oh, I am fresh, just coming off of Christmas, had some nice dinner, saw my family, I did some extra case studies. I am fresh. I am ready for this new year. Who is going to keep their psychology in check the longest? It's going to be you, not me. Because me, I tried to trade December. So my mind is already gone. I need to refresh again. So that's important on the reason why you actually want to wait, because it does benefit you. More does not equal more profit, more money, etc. No, less is more in trading. That's always the first value you need to have in your overall trading. Less is more with everything you do in trading. So less chart time allows you to make more profits, more win rate, a higher win rate. It's extremely important to understand. So the next point here is, of course, based on a technical standpoint, we have also gone over December, where December, as a general rule of thumb again, especially in Forex, because there's two different types, what I would argue. In Forex, especially, it's where you get nice price action, or it looks visually, you see, well, right here on the dollar, we can definitely look to continue lower off this 4-hour value gap right there. That's the visual representation. So you think that in December, it has a general rule of thumb. It has this odd behavior that it just doesn't want to deliver. It just doesn't want to do that. For example, the weird thing right here that we had the daily value gap and we did not come into it. That's December, where December looks nice, but it is not nice. The man or the woman has great looks. The personality is absolutely atrocious, and you don't want to be with them. Perfect. That is exactly December. That is also August, where the looks are great. The personality on actually delivering towards those things, that's not that great. Let's stay away from that. That is exactly December, and that is what we need to take into account right there. So it's very important that that here, yes, it might look nice, but overall, it's December. That lack of volatility, that leads back to the basic understanding again. The lack of volatility allows price, well, does not allow price to move. Where the price is right, but the time is not right, which is exactly what we're going to go over in Saturday's video as well, where time needs to agree as well. Price is constantly agreeing. We always have price agreeing. Price is not the differentiator because price is always going to move. Price is always going to do its thing. Time is what allows price to actually make the move because volatility makes the move, not price. Volatility makes the move, which is time. So that is extremely important to understand. It's the basics of understanding of the market, of what we operate in as well. So again, I'll keep on saying it, keep on repeating myself, because then you will also start to believe it, not only understanding, but believing it. And by believing it, we will get you to that next level of that professional level. Extremely important. So here on the dollar, what are we actually seeing? Well, first of all, on the dollar and Forex pairs. So I'm stating again a general rule of thumb where for December price action and August price action, I would argue Forex is the worst. As in Forex is having truly that lack of volatility. It's just not that nice. If you are trading indices, so meaning ES, NASDAQ, YM, DAX, you notice that yes, they have less volatility. So yes, there is still, and you can notice that very well actually on the lower time frame on ES, etc. That if you notice how the candle forms right there, you can see, yes, there is a lack of volatility. Also, of course, contract is ending, all that stuff. But on ES and NASDAQ and YM, the indices in general, it's still tradable. It's more so tradable than Forex because there's more volatility overall in indices in general already than there is in Forex. So Forex, you definitely, I would advise, stay away. Stay away. Indices, yes, okay, could still be tradable. But Forex, definitely a no-go for me right now. Definitely don't want to do anything on Forex. Which also makes the forecast quite easy, right? And the reason I say that is because the way I want you to see this is if you are taking a break in trading, how do you actually go about a break? Because taking a break in trading is not necessarily you want to fully do nothing. I always view it as, okay, you don't need to do anything, as in you don't need to get involved in an emotion level. So you don't actually need to execute a trade, etc. But I still like to be in sync with the market. So I don't have to wait 2 weeks right there to then get in sync with the market again. That's the same with if you are practicing a sport. Basketball, for example. Basketball, how I always used to approach basketball, even in the vacation, try to get some shots up. And the reason why that is important, because the person that still gets some shots up, at least a little bit, doesn't have to be too crazy, still is in sync with the shot form, still is in sync with, all right, how do I actually make this basket? How do I hit that target? And if you don't do that, you lost it and you need to pick it back up again. So that's the same with trading, where if you completely ignore trading for 2 weeks, not saying it's a bad thing, because over time that can also benefit you a lot. But if we know we are going to be trading in January again, then I like to still be in sync with the market. So I still like to see, all right, overall, what is happening? But take my forecast with a little bit of grain of salt. Meaning that don't take it too serious, because I am not getting involved in anything. So personally, I'm also not taking the forecast super serious, because I don't really care right now what's happening, because I'm simply waiting. So by knowing that, the forecast becomes very easy on my side. Hopefully that makes sense. And I would definitely advise to take some notes as well on that, on how I approach December trading. This also goes for August, because they have the biggest stereotype of being just an ugly month to trade. Again, that is a general rule of thumb, because sometimes you will see on indices, on certain pairs, there's still nice price action to trade, which of course you can trade. It just, the the amount of nice price action happens less because there's less volatility. That's what we need to understand. So other months have a higher probability of showing high probability conditions because they have more volatility overall, which is just a simple fact. So then that is not really something to argue against. That is just the market. All right, so here on the dollar, what are we actually seeing? Well, on the dollar, we talked about the daily VWAP gaps right there. And we mentioned everything was actually based, our analysis, or my analysis, sorry, I'll take the responsibility. My analysis was mainly based off the daily VWAP gap right there. And if we want to continue higher, I would like to see a disrespect of that daily VWAP gap right there. If you want to see a respect, VWAP gap is lower to follow through lower right there. Could see it both happen right there. So I'm pretty 50-50 in that case as well. Now, I do still think we can definitely look to deliver into the daily VWAP gap. Do I want to trade it? No. Again, keep that in mind, right? That I'm doing a forecast right now, but I'm not going to be trading it for the remainder of this month. So keep that in mind as well. So right here, we can definitely look to still deliver into the daily VWAP gap. I'm still somewhat expecting that. We don't really have great volatility right now, which is again, very characteristic of December in general, where yes, we have a news event, but overall, the volatility is just meh. It's just not super great. So here on the 4 hour, we have these 4 hour VWAP gaps. We also have very nice liquidity below the daily VWAP gap sitting right there. Then this 4 hour VWAP gap, I mentioned yesterday in the forecast for the mentorship. If I were to trade, then I would not want to trade off that 4 hour VWAP gap, because here I would still expect some messing around right there where it looks nice and then it all of a sudden does this. Might seem like it wants to continue lower, then it does some this. Overall, what leads that? That leads to seek and destroy conditions, where we are not following through on VWAP gaps higher and lower. That is the definition of seek and destroy conditions. So here, if we go into the 1 hour, which I normally don't tend to do, then we have this 1 hour VWAP gap right there, which we can definitely, again, if we already continue lower, perfect. Then we see that and we follow through lower. So if we already get a 4 hour VWAP gap lower off of that, right there, perfect. Then I would say, all right, let's continue lower. Draw on liquidity, next draw on liquidity right there. But in the meantime, I'm just not too convinced on this price action. So here I want to, again, stay away, very 50-50 in my eyes overall. Then on ES, but you also mentioned the indices right there. Well, they're not too bad. They're quite nice actually. Well, here on ES, we had this daily VWAP gap sitting right there, which could be nice. But what are we seeing on a breakaway gap basis as well? Well, we are not really having that intention that we do want to trade back into that daily VWAP gap to then continue higher. Which means that here on the 4 hour, we already have 4 hour VWAP gaps right there, which we can continue higher from. 1 hour VWAP gaps that we also had right there, which led to pretty nice price action overall, which we can continue higher from. Then what is the draw on liquidity? The draw on liquidity is this right there. This high, which is a swing high on the weekly, if I'm not mistaken. Yes. Swing high on the weekly right there. It's also on the monthly. It's also swing high on the monthly. So that would be my next target right there. Seeing, all right, eventually do we want to trade back into a daily VWAP gap? Could be the case. If we see that, then we'll see those breakaway gaps again, right? That will tell us what we want to do. Where in next video on Saturday, we will go over how we incorporate that with time as well. So how you can see, all right, what does time want to do right there? Then on NASDAQ right here. So NASDAQ, we also had these daily VWAP gaps and basically same story where we did have this daily VWAP gap as well. And again, we can definitely look to trade into that because on the definition of a breakaway gap, which we had quite a few examples in the video as well, if I'm not mistaken, where we do see this right there. We do not close above that high. So why do we not trade back into that daily VWAP gap then? That's something we're also going to go over Saturday. And I think you can already notice why. Can you still take a look at this wick right there? That wick right there. Because that tells us a lot, that wick. It's very important to pay attention to that wick right there to see what it is telling us. Now, after that, we create daily VWAP gaps higher as well. Here we can, again, look to overall continue higher. We had the weekly VWAP gap, which we mentioned in the forecast, where if we want to come into that, we can potentially create the high of the week right there. Is it currently looking like it wants to create the high of the week? No, so we don't force that ID. We just keep on going. We keep on going. All right, what can we reach for next? Well, we first have this swing high right there. After we just have new all-time highs as well. So overall, that is the next target that I am aiming for. Those new all-time highs right there. understanding overall that I do not want to see a big retracement here on the monthly. So once we close right there, then a maximum of those highs is retracement to then continue higher off of that. I want price action to do it quite quick right there to continue higher. So that is what I'm looking at on NASDAQ mainly, waiting for clear daily fair value gaps even, or even if you want to go into the 4 hour right there, we already have quite nice price action following through as well right there. Then on the YM, on the YM, let's see, on the US 30, let's see. Monthly following through, new all-time highs is the target. How can we get there? Weekly fair value gap? No, currently not. So daily fair value gap, do we have it? Daily fair value gap right there, too low. That retracement is quite hefty to then continue higher, unless we create the weekly fair value gap. So here, daily fair value gap in the making, which we can potentially definitely look straight into. 4 hour is sitting right there. 4 hour fair value gaps already continuing higher off of that as well. So here, if we create that 4 hour fair value gap higher as well, it depends. How do we close right there? Based on that breakaway gap. Very important, because we already have the same scenario we just saw on, what was it, ES and NASDAQ, where we already have this rejection right there based on that wick. Very important. Study that. It's a great study. Then on DAX. So DAX right here, yesterday had all right price action. Overall, you can again see that the volatility is just, there's a lack of volatility. On the weekly, we have this weekly fair value gap right there. So if we want to continue higher, then we understand this area right there is fair value. This area is fair value, should not be traded back into. As in, yes, it can trade back into, but it will likely want to rebalance everything above it right there if it wants to continue higher already. So that high right there is what it can trade back into. Then these fair value gaps below that, can we trade back into those? Well, this fair value gap, I would say, yes, we can have a sting into it, an aggressive sting right there to then continue higher. But these fair value gaps sitting right there, these are not fair value gaps that I would want to expect higher prices off of. So that already limits our view, as in, which fair value gaps do we want to continue higher off of? That is ideally this fair value gap and potentially the overlapping high as well. So if we take a look at the daily, the 4 hour, we can just simply see again, overall, the lack of volatility. We had a breaker sitting right there, fair value gaps as well, and we could continue higher off of that overall, but simply the lack of volatility is, which we can see perfectly here, perfect representation of that lack of volatility, which is just not that nice right now. If we get some price action higher again, could be nice, but again, mainly for our analysis, don't really want to execute on anything. All right, now we get into Forex, and like I mentioned, indices, if you want to trade, indices are the go-to, I would say, where Forex is just not really worth it. As in, I just can't really I can't really think of a reason on why it would even be worth it to look at a trade opportunity when I know there's going to be another 12 months after these 2 weeks where I can potentially make profits a lot easier than in this December. So I don't know, from a logical perspective, I just can't really see why it's worth it. So here on Australian dollar, US dollar, on the daily, again, we can be looking to target these highs. So drawn liquidity is quite clear. Then on the 4 hour, we're just seeing price action like this. And this is very difficult to deal with, right? Because here, let's say you took a trade right there. 4 hour value gap, which is not too bad. But overall, the volatility just dies down. So what does that mean? Price is agreeing. Time is just not agreeing. And that is when you see this, well, ugly delivery right there, where it's just dying down and it's just not really doing anything. And that is exactly what we need to be aware of. That's very important. All right, let's go over EU right now. EU, and this is what I mentioned as well. And we're also going to go over is this on GU, where this daily value gap is not necessarily where I want to look for higher price off of. 4 hour as well. These 4 hour prices is also not necessarily where I want to look for higher price off of, simply because time is not agreeing. So the probability of that playing out is, yes, it can play out 100%, it can play out for sure. Is it super high probability to play out? Let's say this was a March and we had a normal week. We had the same economic calendar week, but then in March. This would have likely played out and I would have set higher prices right there of those 4 hour value gaps, etc. But because it's December, last 2 weeks of December, time is not agreeing. I don't want to get involved. So when time is not agreeing, this could very well do some messing up right there, some shenanigans, and then we might continue lower, etc. Seek and destroy conditions. It's not something I want to get involved in. So that's very important to understand as well, that time is often the most neglected thing because you can't visually see it. It's like price, you can visually see it. So price, you can make sense of it. You can always make sense of a price. But time, it's like, all right, we can't visually see it, so we tend to ignore it. Whilst time is the most important factor. And price is just because price always happens. Price is always delivering. Price always shows fair value gaps. Price always shows certain things. Time is the differentiator. It's very important to understand. All right, so on GU. On GU, we had, and this is exactly what I mean with just overall weird price action. And this is what I mean with time not agreeing. So let's say this was a week in March, where in March we have nice price action, price right there, daily value gap can continue higher off of that. On the 4 hour, we had a nice rejection higher right there. We could have definitely, in a March week, we could have definitely seen, all right, we can continue higher off that. In December, I do not want to trade off this daily value gap. I do not want to trade off those 4 hour value gaps because time is not agreeing. And that is exactly when you see this weird price action, where we have this fair value gap pushing lower. We also have this fair value gap higher off that daily fair value gap, which just completely fills, barely sweeps the lows right there, creates a bearish fair value gap again. Time is not agreeing. And this is a great characteristic of time not agreeing. This is usually the price action, sort of price action you will see. So you don't want to get involved right there. And the way you can know that is already making the statement, time is not agreeing. So do I truly want to trade this? Probably not. And when you think like that, and when you only trade when time is agreeing, you will never regret it. You can only ever regret it when time is not agreeing. Because, well, it's very simple, because the volatility is when time is there, when time is present. And when time is present, it's easier to trade overall. So, very important. New Zealand dollar, US dollar. Right here, it's the same scenario where overall the price action, this wiki price action right there, is not quite nice. Then on the 4 hour, we are continuing higher off of 4 hour value gaps. Let's see what we want to do with this daily value gap right there. Currently closing quite high. So next target is that daily value gap for me. After that, just new highs as well. USD Canadian dollar. Let's see. So here, this could be quite nice actually, where we have this daily value gap sitting right there, overlapping with the lows, so with the fair value area overall. If we come into that to continue lower, could as well be quite interesting right there. That is mainly what I would be waiting for. Now, of course, do we come back into that daily value gap? Well, we might already want to continue lower off of 4 hour value gaps, which the clear 4 hour value gap that I see sitting right there, which could also be quite interesting overall. So let's see what it wants to do right there. US dollar CHF. So right here, we talked about the weekly. And overall, we also talked about the monthly scenario, right, on the dollar, which we'll touch back on as well. So no worries. But here on the weekly, we had this weekly value gap and potentially the monthly value gap that we can continue lower from next month. Currently, we are already continuing lower. So that tells us, perfect, nothing to worry about. Right now, I would say daily fair value gaps right there to continue lower towards that draw on liquidity right there. Something along the lines of that. Then US dollar JPY. So here on the weekly and the monthly, there's just not really something super clear to target. That low, but it's quite far. On the weekly, again, not a clear target. We are sweeping that previous week low like we saw last week as well. Then here we have the overlapping part in that bigger daily fair value gap. On the 4 hour right now, I would want to wait. So we had 4 hour value gaps right there. This 4 hour value gap failed to create a new 4 hour value gap lower, which I do not necessarily like, as in I just simply don't like that. I want to see what do the 4 hour value gaps want to do right there. Lower, higher, etc. Which of course is not very clear because the dollar is not clear. So overall, you can see the difference between Forex as well. Between the Forex and indices, where the indices were just, the volatility is yes, less, but it's still a little bit there. Silver already continuing higher. So what would you do right now? This daily value gap right there that already pushed price higher is where now you need to look for new context. So on the 4 hour, that would look like the fair value area sitting right there with a fair value gap sitting right there. So the highs overlapping with fair value gap, ideally continue higher off of that. That would be the ideal scenario here on silver. With close targets that we have is, well, we're currently inside the daily value gap. Then the next daily value gap would be the target right there. Gold, let's see, where gold is just not coming back above that high. It's struggling to create the daily value gap, where silver might actually be creating a daily value gap higher as well. As gold is just struggling with that. So right here, I would prefer overall silver. Now, we had a 4-hour value gap, and we can already see that it tried to expand higher on this candle right there. So what is that going to be? That is going to be an entry pattern on the lower time frame in the form of a 50-minute ST right there, in the form of 5-minute ST, etc. So here, I do not want to see this holding currently, and I would expect almost to target these lows right there. Does that mean I want to target them, want to get involved? Absolutely not. Just simply want to wait. Bitcoin right here. We mentioned, all right, if we already get a daily value gap higher, we can look to continue higher already without coming into the weekly value gap. So if we get a daily value gap higher right now, then I would say, all right, let's look to trade off of that daily value gap to continue higher off of that. Quite simple. Crude oil, let's see. Crude oil right here. This weekly value gap is what we talked about, and we had a nice rejection lower on that Monday. After that, we could see we never created bearish fair value gaps on the 4-hour or whatsoever. So here, my next target would be 4-hour fair value gaps right there to continue higher off of that. And then eventually, the monthly fair value gap that we are creating. So this is exactly the scenario that we had on the dollar as well, where we could, and price again, and the reason, because I saw some questions where, why do you mark out a monthly fair value gap that hasn't been created yet? And that's a great question. And the reason why we do that is because price already takes into account fair value gaps that haven't been created yet. So price is already taking into account fair value gaps that are about to get created. So we also need to take those into account. Fair value gaps that have not been created yet, but are about to make. And that is why we use that third candle right there. We need to pay attention to the third candle. Can consolidate, can expand. That will be told by the story on the lower time frame. So on the daily, on the 4-hour, etc. So to read that candle right there, to see if we want to trade into the monthly fair value gap on the next monthly candle, we need to understand what is the daily doing, what is the weekly doing, what is the 4-hour doing inside that monthly candle. That is very important. So that is why I use that monthly fair value gap that hasn't even been created yet. Because price is already, if you were the market maker, and let's say you were creating a market where you would need to offer fair value, where you would need to offer a rebalance. So you need to rebalance a fair value gap. Then wouldn't it be easier on that third candle right there to then come to already set price up very nicely to come back into the fair value gap right there next month to then continue lower off of that? Makes it a lot easier, right? Makes the task overall a lot easier, because then we don't have to come back all the way from here to then into the monthly value gap to then continue lower. It's less efficient. Price wants to do the most efficient thing right there. So it wants to prepare itself to already trade back into the monthly value gap. So that's quite important to understand as well. So right there, monthly value gap that is not even being created, we can look to target. Quite interesting. Nifty, aha, yes. We finally have some kind of retracement. Look at that, that's quite nice. Overall, if we can retrace towards these overlapping parts right there, and how do we know that? Can we retrace towards the overlapping parts? Well, this leads me back to actually a story we did on NASDAQ quite a long time ago, which was NASDAQ on the monthly time frame, which we talked about this monthly value gap right there. How can we know if this monthly value gap wants to push price higher, or if we want to come into the overlapping part? Well, the way we can know that is by, again, reading the fair value gaps on the time frame below that. So on Nifty, on the weekly time frame, let's see. We are creating a weekly fair value gap sitting right there. In first instance, we would expect higher prices off that weekly value gap. If we do not get higher price off that weekly value gap, we will want to retrace towards the overlapping part. So the overlapping fair value gap with that high. All this area is likely low probability that we are going to continue higher off of that. Because if we are not going off the first fair value gap higher, then why are we going off the second fair value gap higher? They're both one discount array. So the second discount array, where we have two discount arrays, is the overlapping part. So how can we know that? Well, if we come into the weekly fair value gap And we see no signs of bullish fair value gaps on the 4 hour, on the 1 hour holding. So we don't get new follow through of new fair value gaps, etc. Perfect. Then we can look to target the overlapping part right there. So that could be quite interesting eventually as well. So before we get into the questions, I am quickly going to the toilet. All right, I'll be right back. Perfect. Right, I'm back. Let's see. Fimuzi, let me see. Good afternoon. Or my friend, could you give me more tips on the science of candles or make a video? I thought the last video you posted about the last fair value gap candle was incredible. Thank you. Yeah, for sure. And we're going to add on to that as well with Saturday's video. So we're going to look to incorporate time. I'm going to dive into it a little bit deeper as well. Because, for example, we had certain scenarios on the daily, on NASDAQ right there, where right here, we had this fair value gap, but we did not trade back into it. Why not? Because we closed below that previous day high right there, so why do we not trade back into it? It's all things we can go over, all things we will go over. Avond, goedenavond, good evening. What do you think about Canadian dollar JPY? Let me see. Canadian dollar JPY, let's see. Let me see. So we are on the daily. Let me see. Monthly. We reached that monthly fair value gap right there, which when I was looking at this, it's quite nice, to be honest, to potentially continue higher off that monthly fair value gap if we get the right rejection as well. On the weekly, inside of weekly fair value gap, very small one. Wow, not really interested in bearish prices of the weekly. The daily right there came into that daily fair value gap. And after that, failed to follow through lower. As in, yes, we had a daily value gap lower. Did not take out these lows though. So meaning that overall, we are respecting, it seems like we are respecting that monthly value gap. So here, if we want to continue higher, daily value gap right there, order block, continuing higher off of that potentially right there. So that's looking quite nice actually. Quite interesting. Looks quite nice. Again, that is where December story comes in, right? What we talked about in the beginning. And can you type again the name of the book? Yes, for sure. So the book I was referring to is Reality Transurfing. Yes, that is it. It's by Vadim Zeeland. Vamit, not Vamit, it's Vadim. Vadim Zeeland, right there. That's the name of the book. All right, let's see. GBP Canadian dollar, for sure. GBP Canadian dollar, let's see. I have it on my short list, actually. So I have it on my list right there. I had it on my list going into the week to look for shorts. And the reason why that is if we look at the monthly, we could create a monthly value gap, but the weekly is where it gets interesting. Because the weekly right here, we had a weekly fair value gap going higher. And we also had an order block. Both the fair value gap and the order block did not show any signs right there on the 4 hour, the 1 hour, that we wanted to continue higher. This creates something that we have in the mentorship called unusual context, where right now you would target actually this low. So that is the draw on liquidity. After that, it's these fair value gaps right there. That is the next draw on liquidity. So what do? You go into the daily, you see, do we have context going lower? Not really, because we don't have daily fair value gap, etc. On the 4 hour, do we have context going lower? We had this 4 hour fair value gap, which did not hold. Then after, we came back into this breaker sitting right there. And right there, we continue lower. So right now, 4 hour fair value gaps as well, continuing lower towards this draw on liquidity sitting right there. Let me see. Ario was with Mentvex. I was with Mentvex for a very short time. To be honest, just to clear that up, because I mentioned it in the beginning of the stream, I did not take away anything from Mentvex. As in, anything I trade is not from Mentvex, nothing. From the moment I got into the community, I was introduced. I remember his name. His name was Vinny, and Vinny introduced me to ICT. And after the first week being in the community, and then I just started trading ICT from that moment on. So I do not use anything related to Mentvex or anything. It's very important to understand. Is your core content and 2022 mentorship note still public? Yes, it is in my Zap. If you go to the description, let me check if it's in the description actually. It's not in the description. Let me put it into the description really quick so you can access it. Let me see. Let me see. It's this right here. I'm going to put it in the chat as well, but I'll put it in the description. It's the second link, the Zap link. That's the one. I put it in the description right now. Let me see if it's there. Vinny Imini? No. No, not that Vinny. No. I think if I met Vinny Imini, then I wouldn't be trading ICT. Yeah, that's funny. It's funny. What monitor do you have, Ario? I have the Apple Studio. I only have one monitor, and it's the Apple Studio. I used to have, and there's also a reason behind that, because I used to have a widescreen, so an LG widescreen, and then also LG the vertical screen. So I had two basically quite big screens. Didn't benefit me, as in it was more so detrimental, because when I was trying to trade or something, I noticed that I was sort of creeping towards my second monitor, where I would put on a video or something to distract me, where right now it's one task, full focused. Trading, full focus. It's very nice. I like it. I love it. Hey, alright, what's up, Misek? What's up? What to do in a situation when price comes into 4-hour value gap, but coming into it leaves behind a 1-hour value gap. So we need to understand first off that the 4-hour value gap is stronger than the 1-hour value gap. So if I understand your question correctly, then it's the same scenario that we have on, I don't remember the pair actually. Which was the previous pair that I went over? Was it, I can't remember. Is it on this list? Canadian dollar JPY? Yes, this one. So here we have a monthly value gap right there, for example, which we can expect higher prices off of. Then on the daily, we have a daily fair value gap going into that. So we need to understand, first of all, this area is the resistance area, what we call, right? That's the 50-50 area right there. Once we create that clear displacement in or clear displacement out again right there, that is when right now we don't have that resistance anymore. So you can expect that, you can expect that 1-hour value gap in your case to give some resistance, but it likely won't hold. It will only give that rejection right there. So you can wait for that first, for the rejection, and then we go higher. I'm just waiting to include the subtitles in the mentoring video so I can be part of the team. Sorry to bother you. No worries. We have subtitles in the mentorship right now on the new website. Since we've opened with a new website, we have subtitles. So it's nice. So what are you waiting for? No, I'm joking. Take your time, my friend. No worries at all. The subtitles will always be there. Let me see. I'd noticed that you don't really care a lot about being in discount slash premium. Is it because you usually trade close to low resistance liquidity round, or am I wrong? You're not wrong. And the way I see that is it's two different types of premium discount. Because if we see that from an SMC perspective, smart money concepts perspective, in other words, ICT's perspective, you could argue, is that premium and discount is premium and discount arrays. So this fair value gap right there is already a discount array, meaning that once we come into that fair value gap, we are already in a discount. So we can continue higher off of that. So it doesn't matter where the fair value gap is. Even the highest fair value gap sitting right there, for example, these highs are also a discount. So they are in discount right there. So it's not your typical supply and demand, which I've also studied for a little bit, where didn't really like it myself. But right there, supply and demand, it would be like this, where everything below 0.5% is truly in discount, which is not that lag is already in discount, if that makes sense. Do you trade Forex this month, or are you on a break? Definitely on a break. Definitely on a break. I would highly advise as well to watch the beginning of the stream. For sure, for sure. Definitely on a break. The website is ario.io. So if you type ario.io, let me type it on the screen as well. I typed it in the chart, ario.io. This is the website. If you go to that, then you will see the website as well. Now, if you have any questions, of course, on the membership, on whatever it may be, on any concerns, of course, you're always free to reach out to our email, which is info@ario.io right there. And I'll go over the emails as well. So please avoid any confusion before you do dive into the membership, so we can get everything clear, so you know what you can expect, etc. Very important. Could you explain the concept of offering fair value? For sure, let's do it. So let's start off with the basics here. We have liquidity and fair value. When I say rebalancing sometimes, I just mean fair value. Fair value, rebalancing, same exact thing. So we're either offering fair value, in other words, we're rebalancing something, or we are taking liquidity. Now, the way you would see this is, for example, on EU right here, the way we would go about this is you would go into the 4-hour or whatever the time frame may be that you are currently looking at. Well, let's look at silver, actually. It's a perfect example. Then you want to look at the most recent legs, the 3 recent legs. The 3 recent legs that we have right here, which is a bit zoomed out. It's not exactly your swing high, swing low, etc. No. What are we doing in the overall structure of the market? Higher, lower, higher. So we went higher, lower, and higher. Now, why did price already allow price to move higher? So why did we already move higher in that last move right there? Because price was allowed to move higher. So when we are allowed to move higher right there, what have we done here? We've offered fair value. And because we've offered fair value right there, this whole leg doesn't need to be traded back into, because everything that's here is already fair value right there. Which means that if we want to go higher right now, then the only place that we are going to go higher from, which we haven't offered fair value yet, which is this area right there, everything above that high. So right there, somewhere in that area is where we're going to go higher from. So that limits the area where we can now look for discount rates, which would mean fair value gap right there. All right, only if we have a sting into it to then continue higher, that is the fair value. So that is where we offer fair value then. If we do not do that, and let's say we have some price action like this, and we disrespect this fair value gap, then what is price doing? Well, because we understand that this whole area is already fair value, then price is clearly not offering fair value. So what is it doing? Well, what is the other option? It's taking liquidity. So then, boom, price is taking liquidity in the form of those lows sitting right there. So that is the thought process behind fair value, where you see, all right, where have we already offered fair value? That will also limit the fair value gaps you are trying to trade off of, which is also quite important. For example, I would not expect to move all the way back towards the low of these fair value gaps right there. Would not be nice. Would not want to see that. If that makes sense. Why the price for Nasdaq on your chart is different than mine? That could definitely be on the thing you mentioned, because I have the contract turned on. So I'm not sure if you have continuous right there. If you go to the bottom right of your screen, what you're seeing right there is the BADJ right there. It adjusts for contract changes. I always want to trade the most recent contract, because yes, the continuous contract is a little bit different, but right there, the contract is what actually is being traded. Now, if you have both those things turned on as well, and you are looking at Nasdaq through something like this, through 8 cap, for example, then you need to understand these are not the actual prices of Nasdaq. This is a CFD. A CFD stands for contract for difference. The futures are the official, quote unquote, official prices, what's actually being traded by the institutions, by CME. And CFDs is created. it's created by the broker itself. So 8cap is in control of whatever happens here on this specific CFD. So the prices here are also different. The prices for CFDs are also always going to be different on every single broker. So if we go over US 100, it's also NASDAQ, of course, Capital.com, also going to have different prices right there. Which, if you want to trade futures and you want to take India's a little bit more serious, I would definitely advise look into NASDAQ, NQ, ES, YM right there. Very important. No worries, Melvin. No worries, no worries. Appreciate that. Thank you. Thank you. I like that. Yes, Melvin, 100%. Do you only trade on days when there are news since you want volatility? Yes, that's a very important factor for me. A very important factor. What differentiates SMC from ICT? It's a great question. And from my understanding, when I used to watch ICT, ICT is the creator of SMC. So again, creator, we can get into that argument, but I don't want to do that, to be honest. But that is how he called his concepts. He called his concepts smart money concepts. So the smart money concepts is basically ICT. That is the original explanation of it. Difference between essentials and masterclass. For me to be able to fully explain that, then please send an email. Please send an email to this address right there. You'll get an answer very quickly. So right there, info@ario.io. Please send an email to that. How do you determine which liquidity sweep is significant? Can you show some example? Yeah, for sure. And I'll try to find some examples. So if we have the foundational levels, which we talked about in creating a trading plan, then first of all, we need to understand the bias. If we understand the bias, the liquidity sweep becomes quite easy. Then, for example, on DAX, I showed an example yesterday, actually, on DAX right here. You have the weekly Verweil gap sitting right there. Weekly Verweil gap, which we can continue higher from. All right, if we go into the 1 hour, then we have the bias. And the bias right here at this moment in time is bullish, right? Because we potentially can continue higher off that. We get a 1 hour Verweil gap right there, a 1 hour ST right there to confirm the ID. So here we confirm the ID to potentially continue higher. Perfect. So what do we do next? Well, after that, London session is almost destined to open. But where can we continue higher from? Well, what are we seeing right there? A liquidity sweep right there. So how can we see, is that liquidity sweep truly a liquidity sweep? That depends. All right. What are we doing on the lower time frame and how are we seeing this? As in, if we fully close below it and we create Verweil gaps below, going below that low right there. So for example, a Verweil gap that would have been below that low, below this low, then that indicates that's not really a liquidity sweep. But for example, the same thing that we're seeing here when sweeping this low right there, which is just a weekly Verweil gap. What happens here? Verweil gap going lower. All right. But we disrespect that Verweil gap by a bullish Verweil gap, which creates an ST. So that right there is how you would say, all right. And what happens then on the weekly? On the weekly, that is seen as what? As just a wick right there. So that is, hopefully that makes sense. That is how I would see a liquidity sweep. Do you trade Nifty? What's your bias? We went over the bias a little bit earlier as well. So if you want to check that out, I would definitely advise scroll back a little bit. I personally don't really trade it, but I do like to analyze it as well. Do like to analyze it for sure. Can you explain how to calculate lot size for indices? Really depends if you're trading CFDs or actual futures. If it's a CFD, then it's very similar to Forex. Are you using the range concept for accumulation time? Range high, equilibrium, range low. Well, definitely a lot of things are incorporated into the trading plan. So I wouldn't say no, but am I sure? I'm not too sure, to be honest, because I don't really understand which concept that is. Hey, Sian, how are you doing, brother? I'm doing great. Thank you. Hope you are doing great as well. Thank you for asking. When is the public Discord coming? I'm hyped. Great question, actually. Probably end of this week. We'll have it ready and we can get everyone in. So hopefully in the next live stream on Sunday, we can say, all right, but hopefully end of this week. And if not, then it's the beginning of next week. Something around that time frame. I'll keep you updated though. Let's see. Let's see. All right, Australian dollar, Canadian dollar. Yes, let's go over it. Let's see. Australian dollar, Canadian dollar. So what we saw first, and this was the same thought process that I actually had. Well, we are potentially sweeping that high right there, which led me to believe, all right, we might actually want to continue lower already, which currently we are just simply not seeing, of course. So here on the daily, we did push higher off of that, which I also wanted to see lower prices first, as in disrespecting that daily VWAP gap. So fully overtaking it, which could be seen by a 4-hour VWAP gap lower, potentially, which we did not get. So currently, I would still say, all right, potentially these highs right there. But after that, I still want to take into account the monthly VWAP gap that is being created as well. So definitely take that into account and keep that in mind for sure. All right, with that and on that note, I'm also going to end it right now. I want to thank everyone for your attention. Thank you everyone for your time as well. It's very important, of course, who you give your time to. So thank you everyone, and I'll see you at the next one. Next video, Saturday, we incorporate time as well a little bit more. Let's see what we can do with time, how we can get more accurate as well. Then on Sunday, of course, 8:30 a.m. New York local time, we have our Sunday weekly forecast. Thank you everyone. Thank you everyone for your time, and I will see you at the next one. Perfect. Thank you.